me. I'm from the Moore School of Business, professor of economics, and been here. This is my 25th annual Economic Outlook Conference. I've organized them for now a quarter of a century. When I started in 1987, some of you might remember, you might be old enough to remember, that was the year of the stock market crash. And that was my first time presenting a forecast in the context of that. And I remember that we actually were very optimistic that the economy would recover, and we got that right. It did recover for the next 3 years. Now we're facing more uncertainty. Our theme this year for the conference is upside potential for South Carolina, but downside risk. There's a lot of good things happening right now in the economy in South Carolina. There's a lot of potential. In particular, we had a very good year in 2012. Our unemployment rate came down dramatically. Employment growth met our expectations at just below 2% growth. That was very strong, above what other analysts were predicting for the nation and for the state. So we had a good year. A lot of momentum going into this year, as I'll show. We're one of the leading states in terms of leading indicators. We are the leading state, actually, right now. We look the best among all states going into 2013. We have a lot of momentum. A lot of potential for job creation in next year, just as we did this year. But the downside risk, and the big one, which Dr. Van Nussen and John Connaughton will talk about as well, is the fiscal cliff. We all know about that. It creates a lot of uncertainty. There's going to be some negative consequences of that. It's just a question of how much. So that's our big concern going forward that could derail any otherwise positive forecast that we have for the state's economy. So this is something that's going to happen in the whole nation, but will affect us here in South Carolina as well. So with that, let me turn it over to Joey, who will present the highlights of our forecast for 2013.
Well, good morning to everyone, and I echo those comments as well. South Carolina has seen strong growth, relatively strong growth in 2012, certainly more so than we saw in 2011, and we are building momentum. We've seen more diverse growth in 2012 as well. Manufacturing still playing a key role, but other industries are beginning to come along as well. Job announcements from Boeing, Bridgestone, Continental, Michelin, and others going out several years. So manufacturing is still a big job generator in South Carolina. Other industries, education and healthcare, we've seen grow this year. This isn't surprising due to our increases in population, the aging population. The leisure and hospitality industries down in Charleston, but up elsewhere, especially in Myrtle Beach this year in 2012, and even construction. A big story there is seeing very small gains, nothing appreciable yet, but the fact that construction has seen any growth at all is very positive. It's the first time construction has seen employment growth since 2008. Construction also seen increases in sales activity and house price appreciation as well. And this is largely along the coastlines, especially in the Charleston market. First-time move-ups are seeing some recovery. Also in housing, historically, we've typically seen new construction take up about 35 to 40% of overall housing sales in the state. Right now, it's down to about 22%. So resale is largely driving some of the housing market right now in this recovery. And one of the reasons for that is that homeowners, existing homeowners who are selling their homes today, are able to reap the benefits of being homeowners for long periods of time, and some have seen major appreciation to their home values during the housing boom and beyond, and so they're now able to take more of a loss than builders can take today, who are exclusively looking at cost. So that feeds into some of that percentage change. The main story is really the significant growth that we've seen in employment services and temporary staffing and in contract labor, and that's actually been at twice the growth rate of any other industry that we've seen in the state. So we've seen 1.8% employment growth over the last year, about 3% among the leading industries, and employment services, contract labor, and temporary staffing close to 6%. So that has been the biggest leader, and a lot of those jobs are in manufacturing as well. If we went out and looked and took a unscientific, informal survey of a lot of the temporary staffing agencies and found that a lot of those jobs being created are in manufacturing as well. So to some extent, the official manufacturing numbers are understated in South Carolina. This, of course, has led to high variability, and this is another theme in employment growth in our state. Although we've seen strong growth, we've seen a lot of variability, meaning ups and downs from month to month, job gains followed by job losses, followed by further job gains. And a lot of that is due to the uncertainty and is due to the fact that businesses are hiring these temporary workers who are moving from contract to contract, moving on and off payrolls constantly. So while we're seeing overall strong growth, it's highly variable for month to month. And of course, part of that uncertainty came from the slowdown during the summer from QE3, the slowdown at the national level that then filtered down to South Carolina. So for 2013, as I said, in 2012, we saw 1.8% growth. We're expecting 1.2% employment growth over the next 12 months. If we look at the unemployment rate, currently at 8.6%, come down about a point and a half over the last year. But a lot of that has to do with declines in the labor force, about 2/3 of that drop. Because we've seen a major decline in the labor force. Again, this goes back to the high variability that we're seeing in the job market right now. And if you look at the labor force, about 20,000, it's over 20,000 persons smaller than it was at this time a year ago. So the labor force is somewhat unpredictable. Typically, it rises as we see job gains, so we expect those to go together. But that really didn't happen in 2012. For income growth, we've seen about 3.4% in total income growth over the last 12 months. Inflation's currently hovering right around 2%, because those are nominal values, so the inflation rate puts that into perspective. And income growth projected to slightly increase to about 3.7% over the next year. And inflation right now expected to, again, to hover around 2% going forward, at least in the short run. Major threats to the forecast, Europe's economy is a major threat because in South Carolina we actually are among the top states that export to Europe in terms of manufacturing. Close to 5% of our gross state product is comprised of exports to Europe. So with the European economy in flux, to the extent that they continue into recession, then that could have a negative impact on South Carolina. And then of course the fiscal cliff, which will have an effect here locally in South Carolina. We grew at about 3.4% in gross state product, but we're looking at several factors that will impact us locally. Specifically, if we look at the payroll tax cut, potentially the Bush-era tax cuts going away, and if we quantify that and begin to look at how much money will be leaving the state in terms of federal tax dollars, it has the potential to decrease gross state product by about 1 percentage point, just under 1 percentage point. And that doesn't look at military sequestration or extended federal unemployment benefits expiring. And I think that if we look at some of the major counties in the state that are within the metropolitan areas, if we look at Richland County's looking as though they're going to basically be hit pretty hard because they're looking at, again, they're looking at the increase in the taxes, they're looking at the military sequestration. That's going to affect Richland County, as is the extended federal unemployment benefits, because a lot of the unemployed workers in Richland County are long-term unemployed, and therefore that will be the expiration of benefits that will hit Richland County. So just to summarize then, South Carolina economy leads most state in leading indicators, as Dr. Woodward has mentioned. We've seen strong growth in 2012, and we've built good momentum. So we should be able to blunt some of the fiscal cliff impact if we go over that or if Congress and the President make a deal. More diverse growth is expected in 2013. We're a business-friendly state, so we have a lot of good things going for us, and we can handle some of the fiscal burden. But if we get a bad deal, then it may be the case that we're looking at anemic growth versus going into a recession. But we are in very good position to be able to blunt that to prevent any backsliding. And that's all I have.
Okay, so that's our opening statement. I know you're anxious to ask questions, so we're all here.
Our four main components and two in particular that we tried to quantify. One is the 2% payroll tax cut, which we are fairly confident is, at this point, is going away. There's no real indication that that's going to be extended. And the other is what happens if the Bush tax cuts expire. That is, if the marginal tax rates go back to the levels that they were in 1999. And what we've estimated is South Carolina grew, the latest data we have shows South Carolina growing at about 3.4% in gross state product. And if the Bush tax cuts, if all of the Bush tax cuts expire, we're looking at about a 0.5 percentage point drop and another 0.3 for the expiration of the payroll tax cut. So that would essentially drop us from 3.4% down to about 2.6%. Now we have other factors to consider as well with the federal extended unemployment benefits, military sequestration, and then sequestration of other state agencies too that receive federal funding. So, but going down from 3.4 to 2.6 is where we've quantified that for those two particular measures.
John, you want to?
Well, my name's John Connaughton. I'm from UNC Charlotte, and Doug brought me down to bear the bad news about what's going to happen in 2013 regarding the fiscal cliff. And I'm of a little bit different opinion. I think we're going over the fiscal cliff, regardless of whether Congress and the President get together and decide on some kind of a package that they can both Republicans and Democrats can live with. As Joey mentioned, one of the things we're going to lose, and this is from a national perspective, one of the things we're going to lose is the Social Security tax holiday that we've enjoyed for the last 2 years. Nationally, that's about $95 billion, so that's a number you need to remember. Second thing that we're likely to lose is portions of the Bush-era tax cuts, but it's not clear how much of those we will lose. The third thing I should say is the AMT patch. And for a lot of folks, you're not familiar with that, but that's actually the biggest single piece in terms of dollars of any of these things that we're talking about. That's about $125 billion a year, the AMT patching, use it with the cash machines. And the third thing that's going to happen is the sequestration. Right now, it looks like that's somewhere in the $100 billion range. And then finally, one of the things that everybody is overlooking is some of the hidden taxes that start to take effect in 2013 from the Affordable Health Care Act. For example, 3.8% surcharge on under an income above $250,000 AGI, that starts to take place as well. So higher income individuals could not only see their marginal tax rate from the IRS code today rise from 35 to 39.6%, but then you could throw another 3.8% on top of that, so they'd be pushing 43% to 44% in terms of their top marginal rate. All in total, if Congress and the President don't get together by January 1st, we're talking roughly $450 billion being taken out of the U.S. economy. That's 2.9% of GDP. That's the worst case scenario at the national level. Now, my guess is that they will reach some kind of a consensus. Something will happen, so it's going to be that's going to be a lot less than that. But it's probably going to be at least 1.6 or 1.7% impact on GDP nationally. That's the best case scenario. I think it's about 75 to 80% probability that they will reach an agreement before the end of next week. And by the way, I know we talk about December 31st as the deadline. The real deadline is probably next Friday, a week from Friday, in terms of being able to push it through Congress and get it done. So, and when I do the presentation later in the day, I'll talk about what happens if you go over the cliff in addition to the $450 billion. There's also psychological impacts which could really adversely affect the economy going forward. We're starting to see consumers rebound. They're starting to get a little bit of confidence. You pull that rug out from under their feet. They see that first paycheck in January and they say, my goodness, that's all I'm going to make, that's all I'm going to take home. That'll change their psychology going forward, and it could take another year or so for that to recover.
Your first and last name for us again, and your title?
My name is John, John. Last name is spelled Connaghton, and I'm the Babson Capital Professor of Financial Economics at UNC Charlotte, and I also do forecasting as well.
Okay, other questions?
Can you talk about a little bit about the Charleston market, specifically what you saw, this year, what you're expecting next year?
Okay, let me start with that question. And it's a good question, actually, because last year at our conference, we identified Charleston as the hot spot in our state's economy, and it turned out that is the case. We knew Boeing was going to be expanding this year. They did. You know, they went from 0 jobs a few years ago to 8,000 now, with indirect effects. So a lot of jobs being created there. Pretty good tourism season in Charleston. The port's doing well. It's just really across the board. We're seeing a lot of exciting things happening in Charleston. We did see that in 2012 like we expected. And we expect that to continue to be the case into 2013. It's the healthiest part of our state's economy right now. If you look at Charleston's per capita income, it's the only region of our state that is close at, or actually just slightly above, the national average. Every other part of our state has relative per capita income below the national average and actually declining. That's what's scary. Even in Greenville, where they've had so much manufacturing investment and employment, has been created, their per capita income still is declining. That's not true in Charleston. It's the only place I could find where we could make that case.
That's national per capita.
Now, yeah, relative to the nation, Charleston is about 100%, right at the national average. Our state is at 82% of the national average. Well, actually, below that. It's declined recently to about 80, just over 80%. But there are regions that are below that and continuing to decline even with positive job growth. And that's true in the upstate. So I would say the low country generally, but Charleston in particular, is doing extremely well, benefiting from all the good things that we see happening in our state. They're benefiting from manufacturing, the expansion of the port, the tourism, even entrepreneurial and innovative activity seems to be on the upswing in Charleston. So I'm most bullish about that part of our state, obviously, right now. Last year, I'll just make one other thing that we noticed about Charleston that continues to be the case. It's the one part of our state we're seeing increasing numbers of college graduates migrate and go to, so that the average education level of the workforce is improving. More than any other metro area in the country, actually improving, not the highest, but improving the most.
So you said personal income is at national average in Charleston and rising.
Well, it's not rising much. It's at about 100%, but it's not falling like the rest of the state. That's the surprising. If you look at Greenville, actually, you even look at Lexington County, which surprised me. Their relative per capita income, as relative to the rest of the country, is declining, has been declining for 10 years, rather dramatically. It was about 94% of the national average. It's down to 86%, something like that.
Greenville.
No, I'm talking about Lexington now. Greenville is a similar phenomenon, and that's where the manufacturing hub is, and we're getting great job growth. We're just not seeing that translate, at least in relative terms, into strong income growth.
This might be kind of a loaded question, but what role do you see state government playing right now in terms of either positive or negative job growth in South Carolina? I mean, is the governor, preferred actions, for example, been something that you see as very positive for the state's economy as far as just pure numbers?
I do. I think the governor gets some credit, and the reason is that she appointed Bobby Hitt as Commerce Secretary. We said this last year. And he had a strategic focus that we haven't had for a while, and that's on manufacturing, and that has paid off dividends. He knows that industry. He's worked hard with the Commerce Department and others in the state, working together with local area economic developers, really coming together to present our state well. We're number 2 by Area Development Magazine in terms of the best place to do business in the country. North Carolina's number 5, by the way. And we moved up this year from 4 to, this is an area development, that's one ranking, but all the rankings we look really, really strong. And you've got to give credit to our state government. They've been doing a good job promoting the state and actually translating that into capital investment. Recently we've seen stories about the big success we had in 2012, continuing to build out the auto cluster, something on the order of 2,000 new jobs on top of the existing job base that we had already of about 30,000 if you look at the transportation cluster overall. So they had that strategic focus. We needed that. We didn't just sit back and say, let's give up on manufacturing, which a lot of regions have done. They made a wise decision to really go at industry jobs, and they did increase this year, even more than the statistics show directly for manufacturing because of a lot of that in the temporary and contingent labor force.
Do you track the use of incentives at all? I know it's very difficult to track in South
Yeah.
Carolina because they don't release much publicly, but is that something that you look at as part of your research?
Yes, we do look at incentives. We don't track them, but we do evaluate them when asked to do so, the costs and benefits of incentives. And over the years, we've seen a lot of different cases. There's no one definitive statement you can make about that, but lately, I think the benefits are clearly outweighing the costs of these incentives. So if you look at Boeing or you look at BMW, there's a very strong case that was the wise decision, even though somewhat controversial when they were made. Now, a lot of other manufacturers get incentives as well. The real key is that they actually bolt their plant and equipment to the factory floor and stay here for a long time. And if that happens, they're going to pay dividends. If they're paying above state average wages, even with incentives, the property tax breaks and other incentives we give tend to be worth the costs.
The governor went overseas for a business trip as well as we're looking at Boeing, looking at Amazon, such all these other jobs coming in. that foreshadowing great things for South Carolina next year?
Well, we hope so. We hope there'll be new announcements. Every day the Commerce Department's coming up with new announcements at a rate that's really quite surprising compared to what we'd seen, for the past 10 years. This was a very good year, and we do see that momentum continuing. I think the missions, the promotion that the governor and others do going overseas is very important. I think it comes at a fairly low cost and potentially can pay huge benefits for our state. We need to promote our state. Others are doing it, and we can't just think that we're going to expect everyone to come to South Carolina. We have to show the assets that we have and promote, for example, the positive things that are happening. For example, that we're number 2 in terms of the rankings in doing business.
I think too, some of the announcements that we've already seen, these are long-term announcements, and all these jobs haven't come to fruition yet. So we're going to continue to see the benefits of that over the next several years.
What other parts of the state are you seeing the most potential for growth, and why?
You want to talk to that?
Urban areas, primarily. Greenville is doing well, not necessarily raising its per capita income, but certainly job growth has been very robust there. York County, around Charlotte, is holding up very well, doing very well. Part of an urban area. Charleston, we mentioned already. Myrtle Beach had a pretty good year. The low country. The struggling areas of the state are the rural areas still, with high unemployment rates and not seeing the kind of job creation that we're seeing in urban areas. Also, Columbia has been lagging a bit behind the other urban areas this year in terms of overall economic performance.
You seen any surprising growth in any particular areas that you didn't forecast before?
Our forecast was pretty close this
yeah.
year for most metro areas, so nothing was not a surprise. This is a year that we got right. We anticipated what happened very, very well, and we hope that's the case next year too.
Could you briefly touch upon Columbia? You talked about how there wasn't really as much growth this year. Could you briefly touch upon that and why?
Well, Columbia has been, as you know, traditionally state capital and university town that depends on state government support, and that's contracted significantly since the Great Recession began in 2007. We're finally, I think we're getting that behind us. I think 2013, that won't be as big an issue in terms of state government cutbacks, but no other part of our state has had to see, and we have seen declines in government employment overall, significant declines, offsetting these gains that we're seeing in other sectors of the economy. So with Columbia so vulnerable to state, it used to be, we believed in Columbia that this was a stable base of employment. It's turned out not to be the case. It has been the weakest and negative over the last 5 years. So Columbia struggles for that reason.
What's happening in areas like in Greenville and Lexington, where you have manufacturing humming along, but you don't see that translated into per capita income growth like you do on the coast? Why is that?
Well, when I say per capita, their income is growing. It's just not catching up with the nation and actually declining. So other areas of the country are growing faster. So that's a concern. So we have to ask ourselves why. And we need to study this. We need to understand it. I think we're not an innovative entrepreneurial economy. We're primarily a branch plant economy. We bring in branch plants here. A lot of good jobs are created, but some of the jobs are at or below our average wage, so they're not increasing incomes overall. The other element that we don't have in most of our metro areas is a lot of income earned outside of direct employment, that is through profits and dividends and rents, and that favors other areas of the country, the New Yorks, the Californias, even Texas. We don't have that because we don't have the headquarters here. So being dependent on these branch plants, they create jobs, and what we're seeing, some of those jobs, not all of them, are contingent temporary jobs and aren't paying wages that are leading to higher incomes that close that gap with the rest of the nation.